Hey, it's Mike, and today I want to talk about how to buy the dip without catching a falling knife. So, what I'm talking about is when a market does this and dips, you have to figure out, do you want to buy this dip and hope that the market comes back up? Or are you going to end up buying this dip and then the stock or the ETF or the index keeps falling and you're essentially what you're doing is called catching a falling knife, which is you're catching a stock that's or ETF that's going to continue to fall. Now, some of the greatest rules of thumb that I like to use is if a stock falls but remains above its 50-day moving average, I will buy that dip. If the stock falls below the 50-day moving average, then I don't buy it. I wait for it to go back above the 50-day moving average. So some people will see a stock continue to fall and say, this is a bargain. Well, the problem is that 50-day moving average plays a big role, also the 200-day, but in most cases, it's the 50-day moving average. Now, you can look at sort of technical charts to find the 50-day moving average. However, you could also use Google. Um, all you have to do is just put 50-day moving average for, like, let's say the SPY. The SPY is at 350. The 50-day is at 339. So let's say the S&P 500 moves down from, let's say, 350 to 343. It'll still be above the 50-day moving average, so that's a good opportunity to buy the dip. However, if the S&P 500 index moves from, let's say, 350 to 335 and the 50-day moving average is 339, you don't want to buy that because the next level of support for the S&P 500 is going to be the 200-day moving average. And you look at the 200-day moving average of the S&P 500, that's going to be 312. So you don't want to buy at, let's say, 335 and watch it fall all the way down to 312. So definitely, if you want to buy the dip, always check the 50-day moving average of the stock or the ETF. If the stock falls but it's still above the 50-day moving average, go ahead and move in. Like, that also works as an options trading strategy. If you want to play a bounce, just make sure you have that support under you. You never want to buy below the 50-day moving average. Like, never, ever, ever. The odds are going to be against you. So that's my bit of advice. And the reason why I'm putting this out today is because I do suspect with the huge run up we've had in the past week or so, we may get a pullback in the market. So I just want to encourage you, before you buy the dip on anything, be sure to check the 50-day moving average. Okay. So I hope you enjoyed this video. If you did, please be sure to leave a like on the video. Go ahead and share and subscribe. I do multiple updates each day on stocks, options, stock trading strategies, and other fun stuff like that. Okay. Thanks a lot. Bye.